Hello, today is Sunday. It is the 15th day of June 2014. Welcome to today's chart analysis video. My name is Derek and we're going to take a look at that of crude oil. Two different time frames. This is the 20-day chart spanning the last 2,000 days. Then we'll shorten it out from the last couple hundred days after that. You have this big decline in 2008 with about 9 consecutive red candles down, going from almost 150 to a little over 30. So a very steep decline, to say the least, within these heavily manipulated markets. They were manipulated heavy then, they were manipulated heavy there, they're manipulated heavy as of today. But as far as the analysis that charts show within Fibonacci, very telling indeed, for there was no resistance found here. Rather, it had a nice break to about the 50% mark, comes down to this level for support, and then this, encountered a bit of resistance in here, more than a bit. And you have the situation where you get above the band's rising, you find support within it, you break resistance, and then you have a tiny gain up to this point, thus establishing another layer of resistance, as well as stating, okay, we got this move from point A to point B, and for it to fail, what it needs to do is break above this level and then hold and stay above it, which has exactly been the case, telling me now that the probability odds that this thing moves up towards the previous high is pretty high, if you know what I mean. But this level of resistance here was been support like 3 times. And you had this high here and this low here from this point, which is still yet to have been taken out. Then you ask yourself again, well, what's the next move telling us, higher or lower? And right now it's stating most likely that of higher. And whenever that's the case, you can also make up symmetrical triangles as well. So you have this high and maybe draw a line in here. You got this low. Oh, there's a symmetrical triangle, which, well, that's already been broken. Well, not that one, because we have this low, this upward trend line, excuse me. And then this downtrend line that, well, you can see here, the break above this band broke above it. Resistance has been established on 2 different fronts. Not, those lines aren't too straight, but the whole point is, you can see it currently, it's breaking above the band, breaking above even this level of resistance, looking as if that the odds of testing these previous highs are pretty good. Now what I want to do is shorten this out. And I'm going to shorten out from exactly this top. And to do that, I need the 2-day chart, which is what I'm going to show you, because this doesn't show you too much. Obviously, it shows that it comes down and it's looking as if it wants to go higher again. So take a look at it with more periods. And okay, so again, we'll look at this Fibonacci situation where you come to the first level in here, find resistance, and then you have this classic failed move. And I say classic as in, you find resistance where you're supposed to. Successful support, and then you noticeably break previous resistance up to this level here. Maybe not too far, but enough that it looks as if, okay, we're going to be breaking out and testing this level. But instead, boom, kerplunk. Well, now, when you're here, you got to be stating to yourself, okay, what's the failed move? This move now or this move? Well, the answer obviously now was this was the failed move. For the next test of the significant resistance was a break above, a move up to the next level, then finding support where resistance was once met, back again, back again, back again. And just now, it has now broken past a 1, 2, 3 times hit resistance field, stating that, okay, well, in here, you're bearish, in here, you're neutral. Right now, well, It looks as if this thing is going to be that of bullish. You also got to throw in the fact, because the size of this move is pretty large, that if this thing does roll over, stays and holds below this line for a significant period of time, that I'll be giving it precedence for a failed breakout. But that is the minority, or that is the underdog for what should occur. I would be looking for a move to this previous support level, and for there to be a good chance that support would be found within it. But my bias on this time frame is a move to the previous high of 112. What happens at that point? Well, again, you move it back to the 20-day time frame. My bias right now is to move towards this high as well as 147. So it is an upward bias. It is priced in fiat currency, which is an inflationary tool, or the prices of everything. This is a thing. Just go higher because the currency supply is so large. So thank you for tuning into today's video, and have yourself a great week. Bye-bye.